London, take New York. Especially in silver, for example, on the London market, that is going to end in disaster.
Ladies and gentlemen, another month has passed. As I usually say, Egon von Greyerz is there and, like me, in best mood, because if we look at the precious metals prices, they develop and they go into the direction we were expecting. We saw this long time coming, Egon, but still the masses are not reacting, or they reject to see it, what happens in front of them. It's great to have you back, as always, Egon. Good to talk to you.
Thank you, Jan. Well, it's always exciting, but some people say I am saying the same thing for the last 25 years, and to some extent it's true, because I haven't changed my mind. And what I said 25 years ago is happening, and gold is up, depending on the currency, 17, 18, 20 times since 25 years ago when we started. And it's going to go a lot further than this. And people should not look at the short-term moves, should not look at corrections after major moves like we saw at the end of January. There was a big correction, especially big in silver. But that's what happens in bull markets. You get big moves up and you get big corrections. The next leg up, Jan, is starting soon again. And that's going to be a big leg. So people should just hang on to their gold and silver for many, many years, because we are now seeing the end of a monetary era. And that means that currencies will collapse and gold and silver will continue to reflect that.
Egon, we see many negative developments everywhere around us in our daily life, or we see it and hear it in the news. Let's begin with the USA. A press release or a news I could hardly believe. Retail investors, they seem never to learn. They put in 21 days 48 billion into stocks. Let me show the press release. But it's not only the USA, it's the same here in Europe. The stock market's like a miracle. Retail investors have poured a staggering 48 billion into stocks over the past 21 days. This news is a week old or so, making the largest retail inflow ever recorded. The pace of buying highlights extraordinary conviction among individual traders. Such record-breaking inflows rarely occur without strong underlying momentum. Retail participation tends to accelerate when markets are trending higher, reinforcing bullish sentiment. This level of inflow suggests heightened risk appetite. Individual investors are deploying capital aggressively despite broader macro uncertainty. As I already said, Egon, either they dump money, never realize what's facing them, or they are hoping for inflation gains. What do you think is the reason? Still the wealth illusion?
Yes, obviously the stock market has gone up dramatically in the last 20 years, 50 years, whatever period you want to look at, primarily due to money printing and liquidity. So a lot of money's come into the system, and the people who get hold of it first are the wealthy and the investors and funds, etc., and they invest heavily. It is the end of an era sign, this. This is what happened, especially retail buyers come in at the very end in a big way. I think stock markets are not far from turning in a major way. And you could see that if you look at, for example, the Standard & Poor's index against gold. If you take gold has just recently turned up against the Standard & Poor's, and that is from a very long-term downtrend. So we're looking here now at stocks turning down and gold going up. So that spread means that the gold is going to lead on the way up now for a long, long time. Or whether that's 10 years or 20 years, I don't know. But we are moving from, as we have discussed before, we're moving from paper assets to hard assets. It's not just gold and silver, it's also commodities. We specialize in gold and silver, as you know, physical, also the banking system, for the simple reason that they're not in the financial system. So therefore, people can actually get hold and touch their fortune rather than have a paper asset within the system. Gold and silver mining stocks are going to move up a lot also, but they are within the system and therefore riskier. So, yeah, to summarize, it's the end of an era, euphoria, that's going to end in tears, because I think stock markets are not far from topping now, and a lot of people will lose a lot of money in this shift from paper assets to hard assets, because most people will still invest in the paper assets. They will buy on dips several times until the market goes down so much that they've lost a major part of the fortune. That is, to me, a high degree of certainty that this will happen in the next few years.
I think so too, Egon. And one thing that can also force the markets down are so-called forced liquidations. And I think what we saw recently with oil capital is one that could become a tsunami. A shockwave is rippling through the 1.8 trillion private equity credit market. Blue oil capital has permanently closed the doors of one of its funds. Investors can no longer withdraw their money every 3 months as before. Instead, the company is now selling assets to repay capital. That was the summary of this article, Egon. You talked about that several times. The assets that were bought up with paper money will fall with the paper money devaluating. And I think many people will not be able to draw out the money from their elevated paper assets. This will bring the stocks and other assets in relation to gold down, as you predicted, and as I also agree on that.
No, definitely. And as you say, I warned about private equity is a massive bubble based totally on leverage, buying good assets and then leveraging them up so that the people who actually set up these private equity funds can take out their cash, put it in their pockets, and then leave the company heavily leveraged. And that only works in a bull market, in a strong bull market, so that they can then sell this company a few years later and get a good profit out of it. But that time is over. When stock market goes down, private equity have no chance of surviving, in my view, because their assets will go down in price dramatically. There'll be no buyers of their assets, and they will get margin calls on their loans. And it's the same with private credit funds. They will be a disaster. Nobody in the coming era will repay their loans. When I say nobody, the majority will not repay their loans, which will mean obviously a major problem within the banking system and the financial system, and many banks going under, because people have now taken on loans, and companies, and as we said, private equity companies, to the extent that only works in the bull market. I think it's like pass the parcel. In the end, someone is not going to take the parcel. The last one will be left with the parcel, and that's what we're going to see in the next few years.
And even some billionaires are warning. I think we quoted Ray Dalio already a few weeks ago, Egon, and he is warning again. And he is warning of the death spiral. To back up his response, the response of Dalio, he pointed first to America's swelling national debt, hovering around 38.7 trillion and climbing as of February 26. In fact, Dalio has long warned of a looming debt death spiral, where the government must borrow simply to service existing obligations, a dynamic that accelerates over time. I think he is completely right, Egon. And the death spiral, I showed that recently in another video by Rafi Faber, is very well described here. They simply, as Dalio said, have to borrow more for current obligations. And this, of course, will drive down the prices of the bonds, increases the interest rates and the yields, something there is no way out. And we are exactly moving towards that direction.
Ray Dalio is a very wise man. I mean, he's been extremely successful in his hedge fund, Bridgewater. And now he's taking the last phase of his life by teaching the world actually what is happening and what is likely to happen. And anyone who hasn't read some of his books or listened to his words, they should do, or read his articles, because, as I said, is real wisdom there, and a lot to learn. And interestingly, I mean, he hasn't been a gold man always, but he's now a strong believer in gold, because he sees like some of us, what is happening and what's going to happen. And to protect yourself and your wealth, you need to hold a major investment into gold, again, in physical form, of course. So, Ray is, I totally agree with him. And I think we are going to see that period of decline that he describes, and is going to be vicious. So investors better protect themselves now when they still have a chance.
Absolutely, Egon. And in such hard times, the money is sought by the state and they are accumulating. They try to get money from everywhere, not just from printing. They get more and more crazy ideas. And recently, we had one from the Netherlands to tax unrealized profits. Imagine that. What kind of stupidity is this? The Dutch House of Representatives on Thursday voted to pass the Actual Return in Box 3 Act, a reform that will tax residents at a flat rate of 36% on the actual returns they earn from savings and investments, effective 1st of January 28. Under the new regime, the tax applies not only to income that has actually been received, such as interest, dividends, and rent, but also to the annual increase in value of assets like stocks, bonds, and cryptocurrencies. Luckily, they didn't mention precious metals, by the way, even when those assets have not been sold. This legislation will not survive. It's insane, and I think it will not pass the court system. But such thoughts alone are, in my view, totally insane. And they speak, for instance, also for holding assets, precious metals, outside the European Union. What do you think?
Well, I think it's absolute lunacy. You know what it will lead to, and it will lead to the total collapse of the system, because if it passes, people will pay now massive amounts of tax at the peak of asset markets, stock markets, bond markets, etc., on unrealized gains. And then when the markets crash, which is inevitable, we've been saying this for years, they will crash, and then they end up with a massive loss on their tax payment that they can't recover, and they will go bankrupt. This is a system that Europe's socialist governments or semi-socialist governments they're desperate. So they're trying to implement this just because they need to raise taxes. I've been talking about this for many years. Investment is one thing, you should worry about your investment, but worry about your taxes. There are many people who live in the same place and can't move. They're not always in a position to protect their tax situation. But if you have bigger amounts of money, it's not worth staying in the EU, for example. It's a horrible system of confiscating your wealth even before you made it. It's just your paper wealth which will disappear. Now, I know for the time being, and that might be a temporary loophole, if you hold your stocks in a company in Holland, then that is not taxed on an unrealized gains. But I'm sure that they could easily change that too if they find that a lot of people will change their holding to set up a limited company instead. So yeah, it's frightening, and it shows that they want the people to end up with zero wealth at the end of this era.
Yes, that's right. And while we are fighting with such insanity here, the gold continues to move into the east. There was just a new headline from the Indians buying gold like crazy, and right so. Here we see it, Egon. Despite high prices, Indian gold ETFs witnessed record inflows in January, and I saw recently a number that was over 60 billion US dollars, the total imports in the past year. India and also silver massively close to 8 billion. The Indians are buying like crazy, and I'd like to continue with buy from China, because he is sharing an observation here. Just after the Chinese New Year, many gold shops stopped selling their gold bars. All contracts signed before the holidays are being refunded. The gold shortage is extremely severe. 10,000 will be coming. I consider buy a very reliable source. If they already had to cancel contracts because they have no gold there, My goodness, that shows us the direction where we are heading.
Well, there is a total disequilibrium in markets, precious metals markets in the world. The paper markets are massively short. Take London, take New York. I mean, especially in silver, for example, on the London market, that is going to end in disaster, and this is why the market is going to go much higher in silver and also in gold because of these shortages of physical. These paper markets shouldn't exist. The LBMA banks have been able to cheat the market all the time out of real gains by playing the paper game and just issue massive amounts of silver contracts and gold contracts, especially in London, but also on COMEX, of course. That's now coming to an end, and this is why we're going to see everybody scramble for physical, and the physical is not going to be there. And this is why we will see major increases in the price of gold and silver. Even in the next few months, I expect that, and obviously over the next few years also.
I agree, Egon. What else could I say? I really do. And I especially agree in the case of silver. We have finally to say some words about silver and also the Mexican situation. We saw how fast things can change. Mexico, by far the biggest silver producer in the world. Now there are riots, chaos, because a criminal was shot, but an influential criminal. And that shows us also, I like mining stocks. Many silver companies are based or producing in Mexico, obviously. But that shows us that physical ownership of the metal is so important because many things can happen to the jurisdiction where your mining company is producing. The silver can be confiscated. Many things can happen to interrupt the production in such a country. And in case of Mexico, I think that will even increase the pressure on the silver price to the upward direction.
Yes, absolutely. The gold silver ratio is now around 57. That is, gold price divided by the silver price is 57. I see it going a lot lower, even in the short term. We had the 30 level in 2011. I think it will go much lower than that, probably down to 15 or lower. How long that will take, I'm not going to forecast, but that's the trend. And therefore, but silver is a lot more volatile, as we saw at the end of January. It fell a lot more after a major up move. So people should be careful with holding just silver. But a whole part of your precious metals in silver, the major part in gold, in our view, also mining stocks. But as you pointed out, the mining stocks are not wealth preservation. They are within the financial system, and we can see political risk, like in Mexico now. We can see geopolitical risk, and we can see financial risk with the mining company. So real wealth preservation is holding your gold outside the banking system in the right jurisdiction, because EU now is not a safe jurisdiction. So you should hold it outside, like in Switzerland or in Singapore, but not within the EU and not in the US. I expect capital controls in the US and also in the EU fairly soon, as the pressures continue on financial markets. So it's very simple. Just own some physical gold and silver, store it outside the banking system in your name with direct access, and then you can sleep well at night, because we are going to have the biggest financial circus that the world has seen in the next few years. And that's not a circus where you will laugh and have fun. It's a circus where you cry and despair, because it's going to be very, very tough on the world. That's my advice.
That was your final statement, Egon. Wise words, and we know good sleep is very important, therefore prepare. But the people who listen to us, I think they are prepared. Thanks for this month, Egon. Auf Wiederluke, and be well. Bye-bye, till next time.
Auf Wiederluke. Thanks very much.
Thank you. Bye-bye.